And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, August the 24th, 2023. I can start by saying, gee, what a difference a day makes. But then again, we were all there. I'm going to start here with the S&P, and I'm going to start on the 4-hour chart. That, as you can already see, I have marked as complete the minor wave 2. And I will say straight out, there is an outside chance. It has only come down to 0.786 of a retracement of the rally off of the 43.50 low up to the high that we reached overnight in the Globex session. And that leaves open the potential that we are somehow putting in a very strange, that this is wave A of 2. This is somehow going to work out to be a wave B of 2. And then we still have a C wave up. Now, that is an outside chance. So please bear that in mind. Now, when I take this down to the hourly, it's going to definitively go against what I just said. And I'll show you how. I have 1, 2, or it's going to be A, B. Let's say 1, 2, 1, 2, 3, 4, 5. So it could be A, B, 1, 2, 3, 4, 5. Putting a B wave down here. But if I count this out as 5, then indeed, I would be in favor of that the market has completed the minor wave 2, and we've dropped into that third wave. Again, going back out to the 4-hour chart, and I'm going to be, we're going to be talking here on what I see on the 4-hour chart. We can take a look, and we can see it is exactly what I look for. Even on the 1-hour chart, it's exactly what I look for to start and to kick off a third wave. Remember, as I've talked in the past, and I believe I even included yesterday during the update, while we would continue to look for the potential for a move back above 4,500 here, and that would have fit within the realm of a minor second wave up, the fact that it would not change that what I would look for, that if the market, which by the way did get above the 0.382, so all fairness into the wave 2, it did meet the absolute minimum. But if it failed to get above like the 50% to the 62%, and we started to tumble, it's going to demonstrate or show us weakness, underlying weakness in the market. And if that's the case, and we are dropping into the third, that what I would expect to see is a non-stop push lower. In this case, because that was the direction. And I think when I was making the example, I was using, doesn't make any difference on the direction. If the market is showing underlying strength and we're in an up and we're in an impulsive move up, then it's just going to start and it's not going to stop. Why and so many times that is more believable than me saying it in reverse, that the market will start to head lower and it's just going to appear like it's not going to stop, because I have to tell you, basically today when you were trading it, that's pretty much what it was telling us. We're going down. It just started to break. And now I put these fib retracements on this to start to measure where breakpoints were going to come in to signal. Oh, it broke that. First, it broke this support. Then it broke that support, broke this support, broke that support, and stopped on this one simply because the bell rang. Right? And even in the aftermarket, that it didn't really find any oomph to get itself up there. Now, we're about 8 minutes away from the start of Globex, and what's it looking like? Oh, it might open up a quarter. 25 cents, one tick off of where it closed. So if we continue to get this evidence from the market, then of course we have no choice but to accept what is happening. So if once it starts to break below 43.79, that's the last stop. And we've got some price support down here at 43.73, and then again at 43.66. And then next up is 43.50. Now, I would anticipate and expect 43.50 to provide some support. But once it starts to break under there, then it is confirmed, pretty much confirmed, that we have completed minor wave 2. So outside, I will just say, we will get confirmation. We will get stronger confirmation, I will say, but it continues to leave that outside chance. And I will show it to you if I can just put this together. And I'm going to add these two. These are the irregulars. And because I just hit inside my brain that more recently we are seeing, particularly in a wave 2 position, where the market comes down, puts in an additional new low, and then rallies back up to finish the wave 2. So again, this is unfortunate because a lot of us are like, oh, it's a wave 3, it's a wave 3. And I'm going with that right now, but we have that support at 43.50. And if it breaks, it can break all the way down to 42.98 and then somehow turn itself around and start heading back up again. Now, again, major earnings reports are pretty much done. The fact that NVIDIA actually is now being quoted lower than where we started the whole shebang. It closed basically, let's say, unchanged and up 47 cents. This is after this market ran to 519 after these earnings. So while, we all acknowledge, good job, NVIDIA, somehow the market came back in and ended up selling it. It took all day for it to get down here, by the way. This is one where they kept hanging on, and they jumped back in and buy it. And the other thing that I noticed today, yesterday I was telling you that I seem to have noticed that the volatility trade, the dispersion trade, as some call it, is where yesterday I felt they were selling volatility, which is mean they were selling the VIX. I'm taking those proceeds and they were buying the volatility in the underlying components. And that's pretty much what we saw. And the market just went up and up and up and up based on the earnings. Today, did that reverse? Well, VIX was up over $1. So did they reverse it by coming in and buying now the volatility, the index volatility, that's the VIX, and then selling the underlying volatility? That's the balance of all of the components. Possibly. There was a lot of adjusting being done in NVIDIA, a lot of adjusting being done in Apple and AMAT and AMD and Amazon and Google and Meta, Microsoft, Netflix, and in Tesla. All of the Magnificent Seven, and I named a lot more than 7, all saw the turn, all saw and felt that turn. It was very definitive. Now, if wave 3 is in force, so again, what I did, I just put my retracements on here, added 1.236, 1.382, and so that I can give the full picture in case it does turn into an irregular. Those are the levels. But now let's take a look at okay, we are in wave 3. What are the downside expectations? Well, I got to, first of all, switch this over to extensions. And I'm going to go from that level up here. I'm going to connect it down to the bottom wave 1. I'm going to go up to the top of wave 2 as it stands right now. And you can see that what we are already on, in terms of that this is the third wave, it's hit that first level, 0.382, 43.76. It just hit it, bounced a little bit above it. So again, okay, it all sounds good. Now they're bidding it up a little bit more. So again, what we get breaks below there, our next support level is 43.43. One below that is 43.09, and now we're below, actually at the 50% level, we start breaking below 43.50, which is the starting point for wave 1. I believe if we really take a look, that these begin to also match up with some of the 1.236 and 1.382. Now, wave 3 would be equal to wave 1, which is not the most common, at 4201. But what we're really going to be looking for is more likely down to here, 1.618. Again, we're just looking for the third wave. The third wave is normally the longest and the strongest. The third wave is the one that it will subdivide. So if we're getting close to finishing the first 5 waves down, then within this minor 3, this is minute wave 1, and then we get a minute wave 2 bounce. I don't know if it's quite finished just yet, so we're going to have to leave that. Also, within this third wave, if it's the longest and the strongest, and one thing we noticed today, bounces were like super shallow. There was like maybe one, and I'd have to break it down. Let me look at the hourly chart. You can see there was really just one, and it was right here. This one, yeah, they took it back, but then the next bar just swamped it, right? This one, actually, they took up. So this happened at the noon hour. We had pretty much the only notable pullback, the notable bounce, and then the balance would just hit the bid, hit the bid, hit the bid. So if anything, 1, 2, 3, 4, 5, this being a little anomaly inside the 3 of 3, or the 3 of 1. That was the 4 of 1, 5 of 1, maybe done. So at any point, once we are done with that 5, we're looking for 3 up again. Remember, building blocks. So 1, 2, then the 3 of 3 move. So we pretty much almost reached 3A2. Well, for minute 1, yeah, that kind of fits. We did it all in one day. Yeah, we did. Remember something that I noticed and I always felt. The markets tend to go down a lot faster than they go up. It takes a long time to get all the way up to here, but it took 6 hours, basically, longer, but you understand what I'm saying. It took no time for this to kind of drop and just fall out of the sky. So now, here's the next important thing I want to kind of share with you guys. We're back over here. Yesterday, this is where interest really comes in. I just really need to add one more study, if I may. I'm going to add an additional I'm going to add the SMA because I don't normally use them on my charts, but there are times when we probably should. I'm going to do simple moving average. Add it, and let me just go over here and make some adjustments. They're going to close. And we're going to do a 50. And I want to make it that color, and I don't want it to be drawn as that. I want it to be drawn as this so that I can distinguish it. All right. So I'm going to put that up, and I'm going to hit apply, and I go here. Okay, so here is the EMA exponential. Here is the simple moving average. Notice where it topped today. It went up and gave a big old wet kiss to the 50 SMA and sank. Now, yesterday, we moved above the 4, the 8, the 50, and the 20 and closed above. Then in Globex, we managed to hang out above, but work our way up and kiss that 50 SMA. And then during our session, pretty much from the start, bing, 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 broke back below the 20, back below the 50 EMA, back below the 4 and the 8, and closed below all of them. Bearish engulfing. So, another hint, likely we've completed wave 2. Okay, just putting that out there. Back over in the hourly chart. Right now, pretty much are seeing that all of our moving averages are beginning to fall back into alignment. And let me just kind of pull this open a little bit. What we see now is the 20 came flying down below the 200s, below the 50s. And now we're waiting for the 50 EMAs now broken back below both the SMA and the EMA on the 200s. So we're getting lined up. And of course, the 4 and the 8 are just absolutely in free fall, as one would imagine. So again, while we might get a bounce, and then what you want to do is you want to use your retracement tool, and wherever that bottom is to wherever the top. So you can go from here, and you're going to pull it down to here. Oops, come on, just get right there. Thank you. And then you've got your retracements. Now, if it's a wave 2, once again, we get a 50 to 618. But right off the bat, look at. I don't imagine that's going to clean itself up anytime soon. So you got a spaghetti factory between 50 and 62%. So it's going to be, the market's going to have a tough time kind of working its way back higher and pushing up and getting all the way through all that stuff. Doesn't mean it can't do it, but it's going to have some pretty good catalyst, let's say. So that is, if indeed that's the low. Can't say, it's way too early to talk that is completion point. But if we get enough of a rally and we start breaking higher, then you can put that in to get your levels. First level really to think about, 4403 or 4420, and then we get up into that level. I'm taking that off so that we don't have it up there. And now we're just looking at these. So we put in some labeling, we put in some thoughts to where wave 3 should get down to. Of course, it can go further than that, absolutely. And that's why we have some additional layers. And we'll be monitoring it all along, of course, and we'll be figuring out what comes next, and we'll just track it all the way down and hopefully trade it all the way down. All right, over in the NASDAQ. Here's what a difference a day makes. Now, this one is pretty clean in terms of that. On my hourly chart, it's a 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. That's why I'm willing to go also in the S&P and say 1, 2, 3, 4, 5. That little blip up at the top that we had in the S&P, there was some type of news, and I think it was just a quote or something from one of the Fed people that are out there on the stump and ahead of this Jackson Hole summit and ahead of Powell's speech tomorrow at 10 a.m. It is going to be very hotly anticipated. So again, who knows what the man's going to say? I don't know. And anybody says that they think they know, okay, that's fine. But I don't. And I just think that, was this in preparation? I don't know. Maybe. We got the bond market a little working its way. We got a lot of stuff going on. So I'm just going to let it happen, and let's just trade onto that. But here in the NASDAQ, again, 0.786, 14,782. Now, mind you, yesterday we touched 15,418, and that was that high that came in the Globex session as Europe opened. And that was it. Now, let's pop over to the daily. Let's compare notes on this one. Looky. They popped above it, came right back below it. The 50 SMA on the daily. So here as well, kissed it and ran. Broke back below the 20, broke below the 50 EMA, broke below the 8 and the 4, and closed below all of them. Bounce? Sure. Where's it going to run into problems? Well, back here, 14,949, 14,993, 15,051, et cetera, et cetera. It's got it all the way. So kind of more clear here, but again, I really cannot walk and say that we won't get the little old irregular. NASDAQ's famous for them. So we're going to include them. And if that's the case, and we get down there and it stops and we rally strong. So again, third wave, it's going to decline strong. If it stops and suddenly rallies in the other direction, then it's a C wave up. And what are C waves? Their nearest and dearest cousin are third waves. Fast, strong, wherever the direction is. Okay. So not saying that that's what's going to happen. I'm just including it so that we're aware if it gets down here, if and when, and we suddenly see something reverse the market, we're like, whoa, wait a minute. Why? If we're in this third, what's going on? We'll have something to look at, something to consider. Not saying that that's what's going to happen, and it certainly at this point is not something that I'm going to be expecting. So here we have it, ABC, wave 2. If the same as we talked about in the S&P, if we get it down there and it becomes minute wave 1, which I'm pretty sure it could be, but again, we got to get in overnight. And I can't really dispel that. Well, 1, 2, 3, and this is a 4. Let me open this up even further, right? 1, 2, 3, 4, 5, but maybe this is 1 of 5, a little 2 of 5, a 3 of 5, a 4 of 5, a 5 of 5. And then we're sitting all the way down here. Very possible. Okay, so we got a lot sitting out in front of us. But as far as fibs, we have 14,782. Then it breaks. Price support, we're going to find it at these levels, likely. 14,738, 14,706, 14,700. And we have a little bit down here at 14,669, 14,642, 14,609 down to 600. Then we break. Then we start to break again. So, and I would imagine that because it's the third, we're going to start to see a lot of more strength to the downside as well. One more time, if we're, and I'm going to take these off so we're not confusing ourselves. If I thought I did put that on there, what happened to that? I think I just took it away. I didn't mean to. I'm going to go out to the 4-hour chart and go like this. Let's take a look at what wave 3 could possibly look like. We're going to go down to here, to there, and then back up again. And here we have it. We've reached the 382 level. We have actually exceeded it, now bonking its head against, which now becomes that resistance of 14,863. And right now we're at 52, but I think we kind of went up and tried to bonk it. Coming down, we have 14,691, 14,520. Wave 3 equals wave 1 at 13,964. What are we really looking for? 13,000. For wave 3, 13,000. So we started this whole shebang at 16,062. Wave 3 takes 3,000 points right off from that high. And then we get a 4 and a 5, and then we're only at my intermediate wave 1. So we got a long road out in front of us. So we have this interesting level. I got to go out one more to figure out what the heck that one might be. That's for that C wave, and that one is already done. So this is coming off. So I'm going to take that off, and then we have what we have is the 2.618, and that would be a really extended third wave. Ultimately, in primary wave C, I will be looking for a break below 10,000, that low, 10,893, which was the October 2022 low. Eventually, I'm not saying in the wave 3, eventually in the primary C wave, I am going to be looking for a break below 10,918. Now, if I need to add one more layer to show what this all can do, then I'm going to also use my extensions, and I'm going to go from the high, which is there, to that low, which is there, to back up to this high, which is here. So 100%, primary wave C would equal primary wave A at 97.80. Now, so I need to fill in my blanks here. 1.618 is there, but why isn't it? Oh, it's not really showing up. So let me change these around. Let me change that is there. And it's all filling in. So why? 2.618. Where's my 1 point? Oh, 1.618. 2.618 is way down there. Doesn't even count. So 1.618 is 58.97. Not necessarily looking for that one. So I might be adding some additional, but we'll be able to refine all of these levels as this whole move continues to put out. In fact, I'm going to take that off as not to confuse upper levels of what we're working on. Back down to my hourly chart. Again, if we're looking for a wave 2, this being minute wave 1 of minor wave 3, and a wave 2, well, we're going to start to bunk our heads against what we have resistance at 14,897 via the 4 period. Then we have it at the 8 at 14,954 via the 8, and then we start to run into the spaghetti factory here. We've got the 200 SMA, the 200 EMA, the 50s right in here, and the 20. And that's all to get above 15,140. We need to break through all of that just to get up to there. If we're looking for a minute wave 2, it's going to have the trouble on to that area. And again, once it's together, we would then use the retracements from there to the low, and you're going to get your levels coming back up. All right, I am going to end it there for tomorrow. On Friday, I think the only thing that we're going to be hanging our hats on, or what the world's going to hang its hats on, we do have at 10 a.m. Eastern, the University of Michigan Consumer Sentiment. So, but also at 10 a.m. at 10:05 Eastern, Chairman Powell gives his opening speech at the Jackson Hole Summit. And I think that we'll slow down to a crawl. And everybody be leaning towards their news services, or I think it's covered live, so they'll be watching. All right, that's where I'm going to finish it up for today. The next update will be on Sunday, and that will be on August the 27th. I'm sure it's going to be a very interesting one. I'm going to wish everybody a really, really great trading day tomorrow. Don't fight the trend. Don't fight the market. These are just old added sayings that always get tossed around, but boy, they're valid. So, and we'll see what happens. Have a great weekend, everybody.